This podcast is distributed for general information and educational purposes only and is not intended to constitute legal, tax, accounting, or investment advice. The information, opinions, and views contained herein are our own and may be subject to change at any time without prior notice. All investment strategies and investments involve risk of loss. Any reference to an investment's past or potential performance is not and should not be construed as a recommendation or as a guarantee of any specific outcome or profit. Basically just means this is all my own stuff. This is what I think is going to happen. If you choose to buy or sell or whatever else it is, that's on you. I'm not telling you to do anything. But enjoy. Probably shouldn't be using this camera on me this morning. It's a little early. I've been up for a little while, but usually get up around 6. Get the Discord open, see if anybody wants to ask any questions. I've had a few text messages, so I know you're out there. But I'm just going to look at Bitcoin. I'm going to kind of go through the charts and see what we see. I'm going to clear it up, though, so it's all naked chart. I know a lot of you guys like it naked. So we'll just start from 0. Ground 0. High time frames. Makes it easy. Okay. Oh, we're going to start here then. This will be a little bit longer of a video. Just we're gonna look at these weekly, monthly lines, and you know what? I'm gonna go to. No, we could do it here. We got it here, so it goes through here. Just wanted to make sure I was gonna get the right trend lines to be able to go through. So these are the monthly. Last all-time high, and then new all-time high. But we'll see. Is it over? Not if we do anything similar as last, and we don't see the time before that on this one. That's with Bitstamp, but I'm trading Kraken, so I'm going to do Kraken. So let's go to the weekly here. And so you can see there's a bit of a gap between the weeklies and the monthlies of when it hits all-time high. Hits all-time high here on the weekly. No, I put this one in the wrong spot. And it was vice versa on this one. So weekly first, then monthly, monthly first, then weekly. We drop below that monthly on the next one. But let's see. So what I wanted to show you, so I went over this, and I apparently did not post it. So we're going to do it now, because we get a lot of people that are worried, which is understandable. We got a bit of a dip going on, you know. But we're in a bull market, so let's look at what we're doing here. So, no, I don't want to do each. I want to do the EMAs. So we're on weekly here. So what you can see is the 20 gets touched a few times, but I'm going to go on the daily so you can kind of see where we're at now. I'm going to bring us back in time, basically to when we look at the last time we broke all-time high and we went up. Okay, this is here. So remember, we had the weekly and then the monthly. We break the all-time high. We come up, we break down, just kind of like we're doing through here. We broke down through the 20, the 25, the 50, and then coming down to the 20 weekly. So that's why it's choppy like a stair step, because it gives you one every week. So, and as you can see, you know, even before this, we had a touch of it. But after we went through all-time high, we had a touch, and then another touch, and then it tried but didn't get through, and then came through. So you can see that you're getting a correction. You're getting this huge gap in between these EMAs. It means the price is overextended, needs to correct. Everything's fine. It's normal, right? So some people will trade it to be out. Now there are some things that will show you that is completely serious, and I'll show you those once these EMAs do cross at a certain point. But what we're seeing here right now, I'm not worried about. We want this, right? This is kind of your what do we call it? That's your zone of buy, put it all in type of thing. So at least that's what I'm going to do. This is not financial advice, obviously. So I am going to be. I'm already long. I've already dabbled in a little bit. I still think we probably hit here because we don't seem like we've did that push down like we thought we were going to. But the structure looks very similar to what we're doing now. We messed around with the 25 EMA here, kind of dropped down through the 50, and then it wasn't this giant wick like we see up here, right? We're here, right? It was just more of like this kind of continuous down, and then once we get to that 25, that's the 20 weekly. That was your spot. So again, we had another one. I think a lot of people we think are here right now, but if we do the same structure, and I'll pull us back just really quick so we can see that. So if we come through, and again, it's just kind of moving along. We did a couple extra all-time highs, but not much. Like we were just barely able to get above, and then back down. And we were still messing around with this 25, right? We were still, dicking around with it. So what could we do here? Best case scenario for alts is we jump back up here, and then we just play around in this area right here, and we let the 20 weekly catch up with us over the next few weeks, and we have a ridiculous fun alt season before the main alt season. So we've already had some amazing alt seasons. Basically since last September, something along those lines. Well, I guess you had DeFi season, but so why do I think we are at this point here? So it can all change. But if we're going, you get similar patterns, similar waves, price structure kind of moves in a similar pattern. It doesn't have to be exact, but you see similarities and everything else that go through. So we broke through all-time high, right? And we basically were just on that 25 all the way up until we broke down through the 50 to retest the 20 weekly, right? So if we go back to here, all-time highs. Now some people might say this was the original, because remember they were flipped, so you had the weekly, monthly flipped. But this was the all-time high close that we ripped up, right? We were testing 25, we tested 50 a little bit, and we were overextended. We got to remember we had this ridiculous dip in March that everything recovered from. So being a little more overextended in this area, it's understandable with what we were doing here. If we were to go off of the original time frame that I thought we were going to be going before we had COVID, which was an event that kind of pulled everything back a few months, was right here. So this, I was playing this out. This was the bottom of the cloud, I think, and we'll look at that here in a second as well. But this was the bottom of the cloud, and I was expecting this to be the next, and we're looking at the 20 EMA, and I'm, okay, this is going to be it. We're going to move up. I thought this was going to be there, right here, right? We weren't overextended. We're moving up that way. But obviously March, COVID happened. We did this thing. Everything recovered. But everything recovered so fast, if we look down here, so fast that the amount of catch-up, it's just very, very easy for it to get extended here. So I am thinking that's where we're at. I think we still have a lot of good bull run left. And if you see, we still got a gap down to this 20 weekly, and that's a great buy zone. So a lot of people are going to get shaken out because we are at such a huge price. Everybody's like, how the hell are we doing this? But think of it this way: you went from 1,000, to 3,000 basically. So in a sense, almost a similar uptick of from all-time highs to where we're at here. It's a 3x, right? Because we went from 20,000 to 60. So this dip, very similar. So if we're looking at that and in similarities of time frames, right? And it's not going to be exact, but we're still looking at 6 months, a little less than 6 months. So 5 months. So let's say 4 to 6 months would be given us if we get this retest of the 20 weekly and it holds and we move back up above these EMAs and go through. Don't be worried if we get another one. This will probably be the 100K mark, right? 100K, come down, everybody's like, we're done 100K, and then shoots up if we get the same rhyme and rhythm. Highly possible, but we're going to do the bearish scenario after this. Let's do bullish first. So this is showing the Ichi cloud on that same time frame. You can see the test at the bottom of the cloud, test in the middle of the cloud. It wasn't as obvious as extended because we were to test it so soon after, so it didn't go to the bottom of the cloud here. But breaking through the baseline and the conversion line, same thing here. And if we look at it on this side, oops, so break through the baseline, the conversion line. Now, was there a cross? There was a cross here. So when it broke down through, there was a cross of the baseline and the conversion line, and we don't have that yet. Not yet. But I think if we get down here, we will most definitely see that bit of a cross before we bring it back up. So still, again, very similar in patterns going forward. So normally in a scenario, I'm using a couple different indicators here, and I'm taking the bull market into play. So for me, I'm looking at I did not open a short, but I did start to enter in some longs on this wick down here. So I have some BTC longs and some ETH longs, and because I know I've already said this in the Discord a bunch, I think ETH now is going to take off. It already has been for a little bit to outperform BTC for the next. This is ETH time, right? This is going to be the alt time. This is when we look at the alt season was here, right? This started a little bit on one. This one just, it took it off. It was like crazy, right? So I think ETH is going to definitely do well. I'm going to position myself in a lot of ETH, more than BTC, for the next 6 months. And I still have a lot of BNB and FTT. The exchange tokens are going to do well. BNB is going to do well just because of BSC. But so let's look at bearish scenarios here, right? Because it doesn't have to do this. It doesn't have to bounce here. What it could do is what we looked at here, right? So you come up, you go bring yourself across. We're almost going to get a TK cross, right? Because it's down in the cloud. We're in a much thicker cloud. If you look at it here, than what was in 2018. So this has a ways to go. This just means it's very thin. It can move through. So the support here isn't much. You can notice that when you have these high points, it lines up with the bottom of the cloud or tops of the cloud, so where you start to get more action and more volume. So that's why the clouds are thicker. You're going to get a little less resistance. So it'll move through the cloud a little quicker. That's why you have the edge-to-edge trades. So again, going back to 2018, our last bull run came up. We had some pretty massive wicks in the beginning, which we did here too, back down here. But here's, a little bit here, but really not much there. So it's pretty smooth, but came down into the cloud, back out of the cloud, and then into the cloud here. So if you look at the TK cross, people were Wait, we're in the wrong. What am I looking at? I was like, that doesn't look right. Okay, here we go. I was like, that doesn't look right. Wrong date. There we go. So TK cross. So we're up above it, extended, coming down. TK cross in. We're in the cloud, but we fell all the way through the cloud. Once you go through the cloud, now you have all of this stuff becomes, the bottom of the cloud is now resistance. All of yours, your EMAs are going to show this. These TKs are basically a type of EMA in a sense, and they'll run it. So once you saw this bounce up here and this resistance here, I mean, on the cloud wise, you should have positioned yourself out. And realistically, I should position myself out, which I have not, and it could be to the detriment of where I'm at. But I'm in a lot of profit, so I'm not too worried about it. And well, if long-term capital gains change, I guess it doesn't really matter if I was going to do it anyway. But we'll see. So moving this down, obviously the clouds being the one that it kind of shows you, you're like, okay, well, we're out, and if we go back, because this is a 30-day the cloud here, so 30 days back, once you see this flip right there, so the cloud drops it, and then a couple days later it flips red, you're in full bear mode, right? So you're below all the price. Cloud is red. It's the same thing if going the opposite way. So you're in full bear mode here. So now you're like, okay, now we have to break everything through and go that route. So, there were some edge-to-edge trades. This was missed. This was like one of the only edge-to-edge trades like in the whole time frame of BTC that was missed, right? So edge-to-edge, it made it, but you got rejected off of here, back down. So let's look at the EMAs. So ultimately what we're looking for is how this cloud reacts for us moving forward. If we get below the cloud and then the cloud flips red, that's the bearish side. So now let's look at the EMAs, right? So remember, this was the point where the cloud flipped. I'm just going to make it so we don't have the 30. Bear with me. Actually, I'm not really tired. That was a lie. I actually feel pretty good today. Okay, so if we look at this bearish scenario on the EMAs, right? So the EMAs, you have this. We're not worried here. We're not worried here. We're thinking it's the same thing that we've gotten this the last couple times where it touches, right? And so you're kind of like, oh, crap. But this breakdown through the 20 EMA definitely tells you, and it's the same spot. This was rejected off of the top of the cloud, and then we drop down, and then a couple days later it turns red, and you hit the 200, right? So the 200 is actually at the bottom of the cloud right now, I believe. So again, there's different scenarios, similar stuff. I would like to see the 20 hold. I would like to see the bottom on the current one we're looking at, but I'm getting ahead of myself. Anyways, so the bearish side, if we look here, this is when you're full bear, right? So all your EMAs start to go below the 20, like your 50, your 25, and your hundreds in there as well. Once it all goes below, then you're in full bear mode here. But if you change yourself out there, you're so far behind the curve on the daily. It's like you have to take some considerations earlier on where you're at and what's going on. And at this point, you've gone from old all-time high of $1,000 broke, right? To hit 20,000. So you 20x'd it, right? So that in a time frame of within a year, right? From old all-time high to here. So ridiculous types of returns of 20x. So, and everybody's euphoric, and it's the same. It's that thing. You see the Wall Street roadmap. It moves up, and everybody's euphoric. They're like, it's just gonna keep going. We're gonna do the same thing, and it's amazing, and it's never gonna stop, right? I mean, 20x from an all-time high in less than a year is just phenomenal, crazy movement. So let's move forward to where we're at now, and we're gonna look again on what could potentially be the bearish scenario. So first off, none of our EMAs are crossed. They're way far apart. So they're gonna come together at some point in time and get closer, right? But These ones kind of tell you on a short-term time frame, like, well, should I start to look at things? Yeah, for sure. Definitely. They're starting to come together, right? Getting closer. Once they cross, still not worried, but it's definitely a time that you start to position yourself in a way. If you have a lot of altcoins that are hard to move, you might want to start to maybe position yourself to where you can, unless you're just going to hold a long term, which, hey, I'm a long-term bull on crypto anyway. Even if this runs the same cycle, hold it for, the next 10 years and you're going to be happy. So, but if you're looking to, take some profits on some places, right? We are looking at places right now which are good places to take profits. So, anyways, so moving forward, we're going to see these kind of come together. We could definitely see a longer consolidation out this way, bouncing in between these EMAs, right? Back and forth as they start to climb together and move closer together, and then break back above. If they don't, so then obviously the bearish side is, and we have some time because these are so far down, right? Unless we just rip down to 19K, but I think everybody would buy all the Bitcoins at that point in time. So if we look at what we're doing here, if we're going to flip bearish, we need the 25 and the 50 to drop below the 20 and the 200, right? And so we have quite a bit of time before that's actually going to do that there. Now, if it does that, obviously we're probably way down here too, and if you're going to get out, it's not a good idea. You probably want to get out here rather than there. But again, this is just telling us that we're moving in that direction, and it doesn't mean that we're going to be bearish at all. But that's what we would look for full-on bear, right? So that's why I kind of like the EG cloud. It kind of gives us a little bit sooner of an idea. I'm going to put the EMAs on here as well so you can see where it's at. So the 200 is at the bottom of the cloud. So right now, edge-to-edge trades are good for down too. So you open a short here, and this would be your close at the bottom of the cloud somewhere. It could be over here, right? It could move this way and then tap that way and move up. But your edge-to-edge is top to bottom or bottom to top, wherever you're at, but we're at the top now. So bearish scenario, obviously we need to have price go below the 200-day, go below the cloud, so that's down in the mid 30s. And this is why if I were trading this and not thinking that I'm in a bull market, and I could be completely wrong, which is fine, that I would be taking 25% for me off the table. Once we get a TK cross, I'd probably take another 25% off the table, right? Once we get to the bottom of the cloud, I'm looking at taking more off, and then once we're a full bull, we get the twist of the cloud, or full bear, I should say, twist of the cloud, as well as being below. Then I'm 100% out if I'm in that scenario. I don't think we're in that scenario, so I may wait I might get all the way out down here completely if that's what happens, but I just don't think we are. But again, we're not bearish in my mind until we get below the cloud. We get the cloud turns red. This can move pretty fast. Again, that's usually what the cloud can do. So, but overall, again, we're looking at the 20 weekly. I want to see that hold up. I think it will hold up. There's a high potential that we could touch the bottom of the cloud and the 200, and I'm totally fine with that. Again, we've extended ourselves from this crazy bottom in March, 1,500% from there to there. But remember what we had. The other one was a 20x from the all-time high up. We're at, 2.5 times her, 3.5 times her from here. So to that all-time high, I don't think we're even close to where we get to in this bull run. Not with the institutionals that are coming in, not with Venmo is now allowing you to trade cryptocurrency, you got PayPal, you got all these things. So there's a ton. Well, 8 Legs Black, if you were watching the live stream, I just answered all that. Hold on. So anyways, kind of done now anyway. So, but again, looking for the 20 weekly, the 200. That's a bounce. I want to make sure that these don't cross over the other ones. I want to get back above the cloud. But this is a time to look for entries, right? I'm in a portion now. I'm going to look for more at the 20, and I'm all in at the 200, right? And I'm going to play that as we go forward. So let's not worry. Let's just buy the dip, and it'll be good. All right, guys.